You're watching Captains of Industry here on CNBC Africa, and I'm chatting to Graeme Stevens, the CEO of Sun International. Graeme, thanks very much for your time. You took over as CEO in February 2013, and we're now just over 3 years into the game. What is your sense of the market in the hotel and gaming industry as we speak?
As we speak, we look at two markets essentially, the South African one, which is still where our core businesses are, but increasingly at the Latin American one, and then quite different places. And in our business, to be clear, upfront is predominantly casinos. You said hotels and casinos. We've got a few hotels, but really what drives our business is casinos. And casinos are driven by economic performance. Generally, if people have got money and they feel free to go and spend it in the same way as they might see a movie or go for a meal, they'll go to a casino. So when times are good, we do well. And when times are not so good, it's a little tougher. And obviously in South Africa at the moment, times are not that great. So
exactly, and many shareholders and investors over the years have traditionally seen the gaming industry as a defensive one. That doesn't hold true anymore, does it?
It's a resilient one, but I think we probably overperform in good times and probably at least slightly underperform in bad.
28 operations, 15 of those in South Africa, which means that if we're going to continue on this downward trajectory from a consumer perspective, you've got tough times ahead. Would that be a fair assessment?
Yeah, I think like any business in South Africa, it's not looking that easy for at least another year or two. As I said, we're resilient, so we're still going to make money, but not growth year on year like we'd like to achieve. And fortunately, we took a lot of initiatives over the last couple of years, so I think we're pretty well positioned to see out the next year or two.
When you talk about initiatives, one of the strategies is the insourcing of food and beverages. How is that working for the group?
It's working very well in terms of now owning a very core delivery, a product delivery to our customers. So we now own it. I think the quality is definitely improving. Our ability to control price points and deliver value for money to our customers now under our control, and we're starting to see some benefits there. When it comes to making bottom line profits out of it, I think that's the year ahead. But we took it on for a couple of reasons. It wasn't just to make money, it was really to offer the right quality at the right price to customers, and also actually to get our staff happy. They were outsourced before. We bought into the principle of insourcing staff, giving them a home in the Sun International family, and we hope out of that to get happier staff. Our business is one where you need happy staff to pitch up, not just staff to pitch up. When you, as a customer, come to our properties, you want someone to serve you with a genuine smile.
Talk to me about Pierre Munch and the potential merger that is now off the cards. That news coming through in early April of this year.
It was a transaction we worked really hard on. There were always two outcomes, and we were never sure which way it was going to go.
Was it 50-50 all the time?
We certainly had to treat it as if it could happen, and there were a lot of implications had it gone ahead. So we were ready with funding. We had looked at parceling up a lot of their small assets, our own small assets, and disposing of them simultaneously. An enormous amount of work went into if it were going to happen, that scenario. I think it probably was always 50-50-ish. And with it not happening, we had to settle them for dropping an objection to our relocation to Merlin. So in our lives, it was we were either going to get Merlin going ahead and have to settle, or get Merlin going ahead and acquire Emperors essentially, which is a great asset. So it was always a good option either way.
What threw it at the end of the day? Competition issues?
Yeah, it came down to competition issues, which were going to take longer to deal with and appeal against than the time frame of the deal allowed. The deal had a 1-year drop dead date, and the process, if we were going to appeal at the Competition Commission level, was going to take longer than that year. So it just fell over when it reached this drop dead date.
You mentioned Merlin Main will be coming online 2017. Are you still on track? First quarter 2017, or is it going to be later in the year?
Very much on track. Obviously going very fast with the construction. We phased it so that the casino should open early April in 2017, the 8,000-seat arena around about September 2017, and then there's the hotel component, which will open early 2018.
This was the transferring of the casino license from Merlin.
That's right, yeah.
Let's talk about the licenses in South Africa and Trade and Industry's attempts to grant another license, which apparently we see licenses capped at 40 for South Africa as a whole. Would that really throw a cat among the pigeons?
Look, what's happened is, in fact, Marula is what's triggered this initiative by trade and industry to increase the number of licenses from 40 to 41. Marula used to be in the Northwest province, and Gauteng redrew its boundaries, and Marula got lost, if you like, by the Northwest to Gauteng. And so they've lobbied quite hard to get a license to replace Marula. We have interacted directly with the Minister of Trade and Industry and have been informed that this really is a one-off to compensate the Northwest for the loss of Marula. And I think we can probably take that at face value. That being said, it's a foundation stone of this industry that the number of casino licenses are finite. And we've all built and continue to build, in the case of Merlin, big casinos, hotels, arenas on the assumption that there are no more coming. And I think it does rock the foundations of the industry a bit if suddenly you can just create one, even if it's for a reason such as the Northwest lost one.
So how do you see this panning out?
We're certainly challenging it at a CASA level. As I say, I think we probably accept that it's a one-off, but even so, I think we need to challenge the ability to just create an extra license. We need to ensure that it is at best or at worst just one and no more.
Have investors been asking questions on this front?
It's relatively new in the minds of investors. It only got announced a couple of days ago. We've actually been aware of it for some time. To date, no one's really contacted me to ask. I guess when we next interact with them, it'll be on the agenda just to understand a bit better.
Let's talk about Latin America. As you say, there are two geographies, so to speak, predominantly Africa and Latin America. You have just announced the merger with Dream SA, which is, according to your statements, going to give you critical mass in Latin America, which is much needed in the gaming industry. Yeah,
Latin America has been a focus for us for some time because there were only 40 licenses in South Africa and they'd been allocated. We've been looking for growth outside of South Africa. And we've had a property in Monticello in Chile for some time. We more recently opened one in Panama, one in Colombia. But we've been engaged with the Dreams shareholders for going on 4 years. I think I've been trying to get this thing done.
And finally it is happening.
It is.
Is it full steam ahead?
It's happened.
It's happened.
Yeah, no, it has happened.
You announced 1st of June.
That's right. It got closed midnight on the 31st of May, finally. We had to just wait regulatory approval, and in this instance we received it.
So nothing can scupper this.
It's happened. No, it's happened. I get a daily revenue report out of 13 casinos in Latin America now. You know, the combination of our properties plus the properties in the Dreams portfolio. So for us it achieves critical mass in a region where we want to grow, and there's a lot of growth coming. It also diversifies our risk. We had one property in Chile, one in Panama, one in Colombia. We had no management team on the ground there, no executive team. We were trying to run it from Joburg. We get a great team through the Dreams merger, and it really just diversifies risk, gives us critical mass, and I think importantly positions us for growth, further growth in that region. There's quite a lot in the pipeline there.
You've still got very significant exposure to emerging market currencies. This is obviously a big focus at the moment. Your concerns on that front?
Yeah, you're right. It's not just emerging market, it's commodity. Actually, maybe the two go hand in hand, but with the fallout in commodities, it has had a knock-on into most of the countries we operate in. Chile, for example, is copper, so we felt it there. Colombia got a lot of commodities underpinning its GDP. Interestingly, Panama is all services, no commodities there. So Panama is still growing nicely.
Heave a sigh of relief on that front.
But it is our smallest property and still to produce some decent revenue. But we have had a look at it. It has made us think about looking at maybe more first world countries, hard currency options.
Dollar.
You pay up for those, because the risk is generally lower. But we've started to open our eyes to maybe diversifying the group portfolio to get some exposure to maybe some more hard currency.
Could you leverage Latin America into potentially the North American sphere?
I guess it would help. It's not the reason to be in Latin America, but I think with critical mass, with a diversified portfolio, not just focused on South Africa, it is easier to start looking at other options globally. And as I say, we certainly are looking. We're probably more inclined to look to the Asian market, the Australasian market, than to the North American. I think it's a while before we go and teach American operators in North America how to do business there.
And not many South African companies have actually managed to successfully establish themselves in North America. Let's come back to Africa. Another trouble spot is, of course, Nigeria, and you're exposed on that front. What has happened to your operation there?
Yeah, it's a country that is challenging, let's say. We've had a situation up there where we've got feuding partners. We don't own control. We have 49%, which is a lesson learned. We've been unable to move forward with that property for a couple of years. We've had great plans for it and haven't been able to implement. And then more recently, we've had this feud in the family that owns the other shares erupting.
So this has not been an easy 3-year period for you?
No. We've had staff in jail on 2 occasions, passports confiscated. We can't get them out of the country.
I saw one of those news reports.
Yeah, it's just a challenge.
So how exposed are you?
In financial terms, not very. Yeah, it's not.
So it's ring fenced. This is not going to have huge ramifications for the group as a whole.
No, and the debt that was raised up there is non-recourse to Nigeria. So it's very much ring fenced to Nigeria. It's not a big component of the group financially, but obviously it's a big concern and takes up management time when you've got employees in jail and employees without passports that can't come home. That takes time, and we've called on the South African government to help, and I must say they've been very quick to come forward.
Do you see a resolution on the horizon, specifically for your employees that are in jail?
Well, they're out now.
Oh, they're out of jail. Are they home?
No, they can't come home. Their passports have been kept, so they're out and they're working. They're back at work at our property in Lagos, but they can't leave the country. They can't come back and visit families. So it's not a satisfactory situation, and it is forcing us, obviously, first and foremost, to focus on them, but to look at other options, potentially including the exit of from the country. I mean, if you can't operate normally there, you've got to start evaluating getting out. The world's got other options for us.
Lesotho, Swaziland, Zambia. Are you having happier times in any of those countries?
There, actually, what we've done is package them up and in 2 phases dispose of them to the Minor Group, a Thai listed company that are growing aggressively around the world and very focused on Africa. And they have a growth strategy led by hotels. What we did is we looked at our portfolio up there. They're all around South Africa, as close to South Africa as you can get, and we're relevant in the gaming industry at a time when South Africa didn't have casinos. In the new dispensation, a lot of their relevance to us has disappeared. So we disposed of them. The second phase being concluded a month or 2 ago.
So this is all pretty current in terms of the transactions that have taken place?
Very much so. We've still got conditions precedent to fulfill in the final phase of the disposal. So it's not done until it's done. But I think over the next few months, each country's got its own regulatory approvals and that sort of thing. We're quite focused on ticking boxes there and concluding the final disposal.
So in the near term, you should see Sun International's assets sitting clearly in South Africa and Latin America.
That's right, yeah. South Africa, Latin America.
And for the time being, Nigeria.
And Nigeria, while we try and figure that particular country out, yeah. But I think with probably a longer term intent to exit at a reasonable price and when it makes sense.
Talk to me about VaultBet, and I know it's very tiny in your lives, but this is the sporting bet or the sport betting environment. Has that got legs?
We think so. We got into VaultBet, now rebranded Sunbed, and hopefully you're starting to see that brand around a bit. We got into it for a couple of reasons. It is a fast-growing industry. Faster than other forms of gaming in South Africa and growing fast in the world. Perhaps more importantly, it's an entree to online gaming, if you like, because it's all online sports betting, and we think we better understand that space very well in anticipation of true online casino gaming coming.
Because that could be the ultimate threat to your business.
It's either a threat or an opportunity. We're looking at it as an opportunity. So we got into Sunbed a couple of years ago. We've already learned enormously from that, what one has to do in the digital space. And we're looking globally at what other online gaming options exist. I think it's ultimately a matter of time before it comes to South Africa. And when it does, we just want to make sure it's an opportunity and not a threat to us.
Refurbishment of Sun International, how is that coming along?
We're doing a lot. One of our strategic focuses was to say before we go looking for new toys in exotic places in the world, we better play nicely with the ones we have, fix the ones we have. The highest profile of those is Sun City, and we spent a lot of time and effort and money over the last couple of years renovating and refurbishing Sun City. The last big phase, the entertainment centre, will be completed in time for the Nedbank Golf Challenge later this year, and that's a very exciting development. It brings back conferencing midweek to Sun City with state-of-the-art facilities.
So do you think you're going to see a direct follow-through to revenues being boosted as a result of the refurbishment of Sun City?
We certainly expect that. We based a lot of the refurbishment on business that should now come back, and a lot of it should come Monday to Thursday in the conferencing space. Sun City is very often actually 100% full over the weekends. It's the Monday to Thursday where you've got to try and get occupancies up, and I think with the renovated conferencing facilities, it has to be the best in the country.
From a Sun City perspective, a lot of it had to do with leveraging the timeshare component to raise the capital.
That's quite right. Look, timeshare has been a feature of Sun City, but I would say a poor cousin in relation to the focus on the more exotic components like the Palace. When we looked at it, we identified timeshare as actually a critical component, because you've got families that come, they stay for a week, they come every time because they paid for it. And over and above that, when you sell the timeshare, you realise cash proceeds. And we firstly renovated the timeshare, and we've been selling it since, and the cash proceeds have been going towards funding the renovation of the other components. And the units not sold go into the rooms inventory. So whether it's sold or not sold, families love staying there, even if it's like just paying for a couple of nights. I always say that out of preference to the Palace, I take my family. The timeshare is actually where I choose to be, and it's a great product. Let's
move from Sun City to Port Elizabeth and your venture in that space. How is the consumer holding up? Now, if we sort of compartmentalize South Africa, so to say, and check in on the individual operations, how's Port Elizabeth holding up?
Port Elizabeth is a little unique in the context of South Africa in that gaming licenses are not in perpetuity there. They come up every 15 years or so for renewal. And we put R1 billion into renewing it a couple of years ago, which included a big new 5-star hotel and more conferencing facilities. And it's not delivering a return on that investment, not just because the economy is down. And the Eastern Cape historically hasn't had the best economy in the country, but in addition to relatively poor economic environment, we're grappling with something called electronic bingo terminals there. It's an alternative form of gaming.
Electronic bingo terminals.
Yeah,
so you're going to have to unpack that for me. I know you are doing that, so it's a form of electronic gaming.
Electronic bingo terminals are effectively slot machines. It's under the guise of bingo, but they're slot machines, and you can get them 300 machines in one place. In the Eastern Cape, the gaming board there has licensed 3 operations in our catchment area of the boardwalk, each with up to 300 machines, total of 900 machines. The boardwalk itself only has 900 slot machines. So effectively, they've licensed a casino of the same size in our catchment area, and that's really.
So what recourse do you have if the regulatory environment keeps changing?
It's a big challenge. We've engaged obviously with them in advance of them doing it, and since them doing it, I think there's a realization now when they see our numbers and the impact they're having that, we were right in saying it was going to be damaging. How you fix it is now quite challenging because these licenses are issued, and the EBT operators themselves have invested. So fixing it is much harder.
And of course that has a knock-on effect into employment in the Eastern Cape, because you obviously employ a lot of people in your operation in Port Elizabeth.
We do, and we've invested heavily. If you look at the combination of the initial investment and the renewal of R1 billion, I think we put 1.6 billion rand into PE. And we feel aggrieved by the fact that the EBT operators are in our catchment area. As I say, fixing it is a challenge. But
so is this going to be a long, drawn-out legal case?
We're not there yet. What instead we've proposed is that we will facilitate the construction of a shopping mall adjacent on land that we own adjacent to the existing development.
So you'll invest even more, Graeme?
We ourselves are going to contribute the land and have long-term lessees who will sign up and against which we can fund. So we don't see ourselves putting in another amount of money. It's about a 1.2 billion rand development. We're not going to put that ourselves in. But if we can get approval to go ahead with that, I think it does, again, differentiate us even more. It brings further footfall to the property, in return for which we've asked for a permanent extension, or semi-permanent, goes to 2045. Now, if we could extend the license, get the shopping mall, then I don't think there's a cause great enough to litigate further.
Because that would change the future of the operation.
It gives it a sustainable future. You know, the problem we face is the current 15-year period is going to come up soon, and we're going to be asked to renew again, and we haven't got a return yet on the last investment. So, yeah, it's a problem we're trying to unravel with the gaming board at the moment.
You've got a lot of challenges. You've gone through a number of them. Obviously, the positivity now coming out of the merger announcement for Latin America with Dream, and it's SunDream.
It's SunDream for now.
SunDream for now.
It's too early to entangle our partners there in a debate on brand. I think I'd like to see the Sun dominate in time.
You came in at the beginning of the conversation I mentioned in February 2013. The share price there was just over 100 Rand. Share price at the moment is just over 80 Rand. Are you under pressure? Obviously, it's a work in progress, and a lot of what you've been investing in will yield rewards down the line. But we know investors, that some of them are pretty short-term in nature.
So internally, we if we weren't listed, we'd be blissfully happy with the progress we're making and the value we're adding. I mean, obviously, one has to take cognizance of share price, and we have got investors that have a much shorter time frame than we do. We said it's a 5-year strategy. We're 3.5 years into that, and I'm looking forward to the sort of June 2018 results when Merlin's open, LATAM's bedded down, some of the other initiatives have come off. GPI slots we haven't discussed. We made an acquisition of a limited powered machine business here. When all of that's together in our results, we're certainly very relaxed internally.
And you set out a 5-year horizon. You
Yes.
didn't say it was going to be 3.5 years.
No, and we said it was, well, we said 3 to 5 years. I think that's, but the big initiatives are 5 years and are happening. And we said we're going to get on and do it, and I think we've done exactly that. So we ourselves internally not fussed. Clearly, we have shareholders who bought high. The share price might be at 80 now. It went up as high as 140, and unfortunately, there were buyers at that level who are feeling some pain, clearly, and who get marked to market themselves every quarter. So we're very sensitive to their position. We spend a lot of time explaining where we're going. Where we're going is where we said we were going a few years ago. We haven't deviated.
Your strategy is still on track.
And we're comfortable with it. We review it annually, obviously. We're not pig-headedly pursuing stuff. So we do review it annually. We think everything we're doing is still relevant, and we're just saying be patient. We're getting there. So I don't think any knee-jerk reaction to share price at the moment. It's not something we ourselves watch, or certainly I don't watch it on a daily basis. I'm sort of aware of the general direction. Usually the CEO just tell
me that the share price can take care of itself. I'm too focused on the operations.
And I think that's genuinely the case. We've got a lot to do. We said we were going to do it. We're busy with it. We're happy we're making progress. Look, in 18 months or 2 years from now, if we deliver everything we've set out to do and the market hasn't reacted or doesn't like it, well, I guess we'll have to have another think at that point.
So let's talk about the CEO sleepout on the lighter side of things. And last year, Sun International was one of the big sponsors of this event. It's happening again on the 28th of July. And you've got to have a lot of clout to be able to get those CEOs to come out midwinter and sleep in their sleeping bags on the streets of Johannesburg.
Look, I think the challenge will be getting them to do it a second time. We were highly successful last year. We had just under 250 CEOs rally to the call, and I made a few calls myself. And I think for the people who came out last year, it really was a meaningful experience. I know for me it definitely was. I haven't twisted arms yet to the same extent.
Are they not taking your call this year?
You
kind of see Graeme Stevens come up on the cell phone and go, "Dong, it's getting close to that CEO sleepout time."
They haven't evaded me yet. I haven't tried too aggressively. We had about 100 CEOs when I checked yesterday. I get a sort of weekly update.
100 is, and how many did you have last year?
We had 250-ish.
250.
So we've got a way to go. We've got just over a month to go. And it's like everything, it's normally right near the end, people rally to the cause. So
well, they can
hopeful.
be berated in the media if they don't. If they were there
Yeah.
last year and now they've given up, because so many people came out and said, it's given them a real sense of what it means to be homeless. So, let's hope they come
I think
forward.
more than the media, their staff should berate them. That's where the berating should start, and they should listen to their staff. So, my appeal would be to all the employees of organisations where your CEO slept out last year. Well, make sure he or she's doing it again this year.
The reason that you got involved in the project?
Look, it started with some of my staff accosting me and saying, would I mind sleeping out a night on the streets to raise awareness for homelessness? And I was very quick to say not at all. It's something I'd be very happy to do. I didn't realise at the time they were positioning it as this sort of almost national effort to get all CEOs out. It snowballed into that in my life. So I personally was very keen to commit to it. Then obviously with the Sun International Association, it's become quite a major corporate initiative and a lot of pressure. We want to raise what we did last year. It was highly successful, the benchmark's high, but I think South Africa needs it more than ever.
And I'm sure that everybody will come out in full support. Graeme, thank you so much for your time. I've been chatting to Graeme Stevens, the CEO of Sun International. You're watching CNBC Africa's Captains of Industry.